With global economic uncertainty, interest rate confusion, and market volatility, how are equity traders coping? Our next guest, Jon Corpina from Meridian Equity Partners, took a break from the floor of the New York Stock Exchange to join us on 7-Day Yield. Jon, welcome.
Thank you for having me.
So is there a lot of anxiety and indigestion on the floor of the exchange with all of this volatility in the market?
We've clearly seen a lot of volatility in the last quarter. It started at the end of last year, and since then, January and February saw significant pressure on our markets. Luckily, March was able to rebound. A couple of factors that have helped. Economic data has helped. Earnings season helped a little bit. And there's been no real major negative headlines that have spooked our markets. It's going to be interesting to see now how we play moving forward with the talk of interest rates and another earnings season coming up starting next week.
And Jon, you're an executive governor on the floor of the New York Stock Exchange. What exactly does that mean?
So it's an elected position. We're involved in rules and regulation, writing rules and implementing on the New York Stock Exchange. Also with writing technology and implementing some technological programs on the floor. And we're also involved in listed companies, helping them choose which market makers that they want to list their companies with and educating them on the equity structure.
And tech is definitely a hot topic right now when it comes to investing. What kind of technology are you investing in and working on right now?
What we currently work on the floor is different features that help us become more robust traders, right? So we're able to trade more, we're able to do more at one time. So it's different algorithms that we use, different access to other markets, and trying to find our clients the best price and the best liquidity.
So robo advice versus sort of the traditional hand-holding stockbroker, has that disrupted the world at all?
I don't think so. I think investors are starting to look into that and trying to see if that's an area where they want to go. Clearly it is helpful in some circumstances, but I think at the end of the day, investors feel much more comfortable and confident dealing one-on-one with an advisor and feeling that personal one-to-one connection.
And when you say investors, do you mean collectively, or when you break it down by age group, do you see millennials turning more towards robo-tech versus robo-investing versus older investors?
I do. I think the younger generation clearly uses technology more in different ways, and whether it's calling for a car on an app or whether it's investing. So I think they embrace technology in a different way. I think it's a great start for young investors to find a means into investing in the market. And if they feel comfortable with that, I think that's a wonderful entry. I think older generations investors feel a little bit more comfortable having those paper statements and talking to investors one-on-one.
So we hear the term risk on, risk off, and if we think about the anxiety level in the market, real quickly, are we sort of heading into more of a risk-on or a risk-off environment?
I think we're getting closer to a risk-off environment. March showed us some significant moves in our markets, and I think when the market moves one way like that, investors look for a reason, they look for a catalyst to get out of the market. So taking some short-term profits off the table is something that investors are going to look for. So if the market does start to turn a little bit, and there's some consecutive days of downward pressure on the market, I think we might start to see that risk-off trade. We're also getting closer to earnings season and continually talking about what the Fed is going to do with interest rates. As that uncertainty is out there, I think it gives the investors a reason to move away from the market.
And before you go, I want to ask you, it's an election year. How are you seeing the election cycle play into the markets right now?
Right, so we're getting closer day by day to the election, and each day it's getting a little clearer. I think in the next 2 weeks there might be a little bit more of a clearer picture as to where this direction is going to go. Investors need information, they want transparency, they want to have a better idea of what next month, next quarter, and next year is going to look like. So as we do get closer, I think investors are going to feel a little bit more comfortable and confident as to how the landscape is going to be moving forward.
Well, Jon, thank you so much for joining us. We'll have to have you back to give us those updates.
Great, love to be back. Thank you.